Welcome to TradeTheMBI.com. This is John. This report is for the 5th of February. Well, it was, I think, a decent day the other day. We're right about where I expected that we would start to see some interesting separation, right around that 2720. That was the expectation once we got well into that 85 range. You knew you were going to break past it when usually it breaks through. This is about where the carry through takes you. And at that point, it becomes an inflection. It's like, okay, are some people going to take profits at this spot? And that can happen within this range. What we're looking at here is certainly the compression. We're getting a key point. Very interesting that it happens to be at the 5th of the month, too, because a breakout up of the green line here would be midterm buyers popping in along with the continuation of rising long-term buyers. And that should certainly propel us, well, towards the highs. I mean, this rising gold hasn't abated at all. We'll continue to have rising shakeout, which is congruent in the sense that it's making higher highs with higher price. So all of that's pretty consistent, and no real impetus for it to die off per se, other than just normal mean reversion, which is just the general flux that you get within normal trading. All in all, it's been pretty strong. NASDAQ, not so much. Now that we've got this meeting between the Azure and the gold, tends to, well, again, be that inflection point. If we look at it from the S&P standpoint, you can see there's still separation there. It's when they usually flatten out is when we get the earliest signs that you might actually get an effective DOC spread, because typical ones that happen within this configuration, you might get a little bit of a downdraft, but usually gets bought back up pretty quick. And we see that a lot intraday. And the euro, it's just flattening out here, and we're still in this same range. That's that top line at 115 that we've had. We're still been well above that 111 range down below. So we haven't even been near that one for a while, and so it's been pretty consistent. Central banks have stopped battling each other for the most part over where the valuation should be. I mean, that was a war that we saw, well, it was about a year ago. And gold, just a little bit of softening. We had a positive extreme run right there that needs to be filled back in. We could see that this was going to happen with the crossovers right there, still well above the zero. So even if it does dip, it's more one of those where you look for the buy turnaround and new highs to be made. So intraday, it was pretty lackluster. Didn't really seem to do a whole lot of anything. We got back and forth. We ended up with a couple of decent buys, but every time the buy, we were already getting near overbought conditions right at that point. I'm not usually a big fan of jumping onto that one. It's one of those where I'll wait for the reset. And in this particular case, the reset came on the pivot with the higher red under the P2. The acceleration, though, in the red was faster than the green, which doesn't happen an awful lot. But when it does, it usually creates a pretty decent run. And that's exactly what happened, even if you waited for the 50% for the turnaround of green. Nothing but gold rising it through there. And again, you get that conglomerates, the positive extremes, starts to look interesting from an attack, but you look at where that red is, rising well above 7.5. Okay, fine. I know that I'm going to get a little bit of a retrace back into it, but that tends to be what it does. And the first thing I'm looking for is that steel starting to rise, and boom, there it is, and that begins the second wave up, which corresponds exactly to that 2717 algo, which created a little push above. But that push above was just a little much, and then the exact same configuration, only a little bit different in the sense that a little bit bigger range to expect from a retrace standpoint. And that's exactly what it did, just filled right back to this. And that's what happens with breakouts. You get the breakout, comes all the way up, and the expectation would literally be coming back to that 2717. I wouldn't even be looking for that little extra dip below the low. It's not worth the risk factor on it. But from a 50K standpoint, under the new paint bar, the difference will be, like in this particular case, where it sold out here on the declining shakeout, as well as the softness on the DOC, where it's recognizing that we're not getting enough of a sell-off to justify altering color trend, and so it stays within that green. And so that will be helpful because, well, you can see in this case it got out at 27 and then it buys back at 27.11. That's an 11-point give up. Now the difference between the entries though will be a little bit different because this one 33.50, we wouldn't get the signal into this dark green, which would be at 35. So you're giving up 2 points, but it's already results in a net savings of 11 plus, and it's just able because again, your biggest gains are always going to be in following these big trend runs, not in the back and forth. And that's just practical elements of, unless you're very careful with your risk to reward on the short-term charts. And that becomes critical as far as evaluating each of these trades individually, because the reality is even with, you can't have a set target and a set goal because within a shorter range chart, you could get a much smaller move like these, and it changes, and it's like, okay, well, you know, you can leave it arbitrarily there, but if you've got clear signal to let you know that you're going to get a retrace, do you really need to take that? But what you do have to do is allow your runners to move when being a short-term trader as well, because that's the way to maximize gains. Unless you're going to be very tight like the NBI Opus Daily, but it doesn't take nearly as many trades, where it has a set profit target, a set loss, and that's it. There's no deviation in between, and you know, again, it doesn't take much to prove the efficacy of it other than to just put out, hey, well, what's its effective win rate? 74%, you know, well, this year it's actually taken a decent number of trades if you look at it from an annualized basis. So far 3 trades this year, but only 30 for all of last year, and horrible from a performance standpoint in its end result. I mean, but again, this is where when you're looking at multi-year strategies, you're going to get that. And it's not a big deal. It's just part of what happens. So, all in all, good stuff. I think that we're just going to get more of this back and forth. We've got quite a few positive extremes coming all the way back to. Some of these have been filled right back in there into the 10 range. Then, of course, there's this low level just below where we currently are right now, which was the next set of algos. There's another one a little further up here, but we'll have to see some consolidation support on it. There's plenty of money available, so it certainly can break out. The question is whether they're going to be looking for a little bit of discount before they make the attack. So we may know that the net concept is still to go higher. However, within that, they can still make some nice movement back and forth. So just play it as we get it, and if there's anything unique, I will certainly put it up. But continuing to work on that adjusted pink bar so that when that's finalized, it'll be very exciting to utilize that from a longer term standpoint, and then also bring it down into 25K and ultimately down here into the 5K. However, we're still very solid with what we've got as it is. As always, though, trade well. We'll talk again later.